we have been, trying to sound a little bit of caution, really starting in May and then again about 2 weeks ago, speaking to the fact that, we felt that the market was really, relying on earnings and earnings revisions to come through. But with, downward estimates for third quarter GDP and continuing pressures all around cost items, whether it's, supply chain related, commodities related, energy related, or quite frankly, labor and wage cost related. We just weren't sure that these numbers that the market had come to rely on in terms of earnings estimates were going to be able to power through.
So where do you think the market is in sort of catching up to those narratives? And at what point do things begin to look interesting, particularly if earnings season, or at least conference call season, ends up giving us a little bit of hope on the look forward to Q1, Q2?
Yeah, so look, for us, this is about the index undergoing a little bit of a mix shift, if you will. We've been talking about the fact that investors have, relied on owning that S&P 500 and the NASDAQ because of this belief that, some of the tech stocks that dominate those indexes are, just resilient to all of these issues. In our humble opinion, we think that belief is just going to be called into question during Q3 earnings. Our guess is that might mean at the index level, maybe another 5-10% down from here. But right now, we're actually active stock pickers. Whenever you get dislocation in markets, there's opportunities. And we think that there are some great things for investors to be buying in financials, in industrials, in energy, in materials, in some of these sectors that are more pro-cyclical, will likely rebound, in the fourth quarter and in the first quarter of next year, and whose valuations aren't stretched, where earnings estimates have already contemplated the slowing in the top line and pressure on costs.